Thank you all for joining us today on what I think will be an exciting and informative and interesting panel and discussion topic. But first, I just want to say a big thank you to Joji Thomas Phillips. You know, he's done a tremendous job creating the Deal Street Asia platform and really providing a much-needed resource for the private equity and venture capital community in Singapore. Also to the entire Deal Street Asia team just for organizing a fantastic event. It's the first time in the past 3 years where I think all of us want to be inside the room instead of outside the room, if you know what I mean. And finally, to our industry colleagues here and mentors, you know, who've paved the way for Singapore to be on the map when it comes to private capital. So actually, thank all of you as well. So to start off, as your humble host, I wanted to introduce my distinguished panelists today, who range across the investing spectrum in terms of stage, from seed to late stage growth and buyouts, and also across different sectors, whether they're technology specific, technology enabled, or sectors that perhaps have very little to do with technology. To start off though, yours truly, your moderator here, has been in the investment industry for the better part of 2 decades, including through working at hedge funds, venture capital, and private equity. Today I join you from Capital Square Partners, which is a quintessential technology-focused buyout firm that invests across India and Southeast Asia. In fact, Capital Square Partners is proof that Asian technology companies can not only be dreamt, founded, nurtured, and enabled, but also geared as part of the value creation process. So without further ado, I will ask each panelist to speak for 60 to 90 seconds and provide their introduction. Vadim, could I start with you, please?
Yeah, for sure. Okay, thank you to Deal Street Asia. I'm so pleased to be here and to meet everyone in person. I'm Vadim. I'm Managing Director at Vickers Venture Partners. I just celebrated my 6th year with Vickers. Vickers is one of the oldest and largest VC in Southeast Asia, established in 2005. Currently investing from its Fund 6, investing globally in deep tech, which means like a scientific breakthrough at the bottom of this invention. So like recent example, biodegradable plastic, kidney dialysis machine, everything complicated.
Thank you very much, Vadim. Shilpa, would you please introduce yourself?
This is Shilpa Kulkarni. I'm a founder, managing partner for Panthera Growth Partners. We are a growth equity investor in tech-enabled businesses across India and Southeast Asia. We are currently investing out of our second fund. I've been investing and operating in this region for 23 plus years.
Thank you very much. Sunil, last but not least, would you kindly introduce yourself?
Yeah, thanks, Anupum, and pleased to be part of this gathering. I'm Sunil. I'm a partner with Quadria Capital. We are the largest healthcare-focused private equity fund in South and Southeast Asia, managing $3 billion of assets under management. We invest across the entire healthcare spectrum, right from healthcare services, hospitals, diagnostics, pharma, life sciences, medical devices, and associated healthcare services. Impact is a very integral part of what we do and how we invest.
Thank you very much, Sunil. So let's get started. PEs and VCs compete on the same turf with rising growth funds and the lure of tech bets. But, you know, before we even get started here, I think we really need to understand what are we fundamentally talking about. And oftentimes, you know, many general partners and fund managers speak their book. But one can learn a lot from those removed from the specific investment strategy. So before we jump into the discussion today, I wanted to turn over to Vadim and ask you, what does growth mean for you? For example, how do you evaluate growth? And is growth where you see other investors take the reins from Vickers to invest in? So Vadim?
No, I think I couldn't call ourselves like a growth investors. We are definitely, we see our ticket size like 5 to 10 million, and we invest into pre-revenue companies. And after these companies graduate from our school, we pass them to you and to you, so like real growth investors will pick up and bring these companies further. So we probably, like average valuation of companies that we invest in, like $100 million right now. So we obviously would like to stick with them and bring them like to multi-billion, but you know that lifetime of the fund is 10 years. So, and we probably on year 7 would like to start thinking about exiting to you.
Okay, yeah, thank you. And Vadim is probably referring to a transaction that his predecessor firm and I were involved in together. Shilpa, just to also follow on to you as well, how do you look at growth? What does growth mean to you, and what is the difference between, yourself as a growth investor, but what is the difference between growth and early stage as you see it?
So growth for us is once a company has reached certain product market fit, and so we are not taking any business model, technology, or revenue risk. We are essentially investing behind growth and execution risk. That's what we are taking. So for us, generally these are companies which are Series B plus, have achieved a certain scale, and their product is well received in the market, and we are providing capital to accelerate growth.
Okay, thank you very much. And Sunil, if you don't mind, I'd like to toss this question over to you as well, because as somebody who invests in a specific sector, growth may or may not be part of your investment strategy. So how do you define growth, and what does it mean for South and Southeast Asia?
So growth, just like Shilpa mentioned, for us is more about companies that are in a cruising mode and looking to change the orbit, which means a stable business, stable cash flows, predictable business. We don't take any technology, product risk. It's all about expanding the market, adding more products. And having solid cash flows. So that is what growth to us would be.
Okay, fantastic. So I think we have what is probably a pretty uniform definition of growth, though of course skewed depending on which stage of the investment cycle each of us are in. And then when it comes to technology, Shilpa, this is a question for you. Your background historically has been actually in tech services, but today you describe yourself as fundamentally a growth investor in tech-enabled companies. How do you view the allure of technology, and what does it mean to you? Is tech an enabler itself, or is it the sector that represents an investment mandate? And also, is there such a thing as deep tech, which has become a popular of late, or is deep tech just jumping on the bandwagons of the various quote-unquote techs that exist today, such as ag tech, ed tech, health tech, fintech, and biotech? How do you view tech, Shilpa?
So for us, tech is, as you mentioned, it's an enabler. We are not investors in deep tech businesses, or as Vadim mentioned, fundamentally new innovation, so to speak. We look at technology and especially digital disruption as something which is bringing about new business models and disrupting traditional ecosystems. And those are the kinds of disruptive businesses that we invest in. So tech is an enabler, or you can call it tech leverage businesses. We also invest in software and in software businesses, but even there, these are not fundamentally innovative or deep tech kind of businesses. They are solving particular problem and bringing about certain disruption in traditional value chains.
Okay, fantastic. Thank you. My next question here is for Sunil, and it has to do with healthcare. Myself having invested in the healthcare space, whether it's in Singapore through Parkway and IHH or Parkway Life REIT, and in India through ASG Eye Hospitals and having exposure to Apollo, I wonder if healthcare investors can remain above the fray for tech. Is tech a necessary element ultimately for the healthcare sector? And I ask in view of the fact that on a relative basis, Asia is underinvested in terms of hospital capacity. They have a paltry 30% of the actual beds available in our Western OECD country peers. So ultimately, does technology matter? And to slip in this question, ultimately, how do you look at technology from a growth lens with respect to healthcare?
So it's a very good question and very relevant for the sector that we invest in. Technology is now becoming front and center of what we are trying to solve for in the healthcare sector. See, there are four things that we try and achieve through investments in healthcare. One is how to make, especially for the region that we invest in, which is South and Southeast Asia, how do we make healthcare accessible? How do we make it affordable? How do we bring in quality, and how do we spread awareness? These are the four things that we are solving for. If we were to take the traditional route of going about building the conventional brick and mortar routes, it will take us ages, and therefore the linear solution is not there for the healthcare sector. And if I was just to throw some numbers, today we're looking at growing if we have to meet the global or developed market average, we're looking at growing the resources by at least 3.5, 4x. So the number of beds in this region has to grow by about over 10, 12 million. Number of doctors who have to come in the field have to go up by about 10 million. Same is the ratio for nurses. Going physical is just not the solution. The amount of money that is required, and we're talking about $600, $700 billion of investment to bring that kind of resources, and therefore the only solution is technology. Technology obviously will not solve for the entire requirement, but will sort of help us leapfrog that requirement. And technology can be used to solve all these four problems that we are trying to achieve through what we are doing, which is again accessibility, affordability, quality, and awareness. It will help supplement resources. You can break the entire process of care pathway into multiple smaller pockets, and technology can cover quite a bit of that value chain just by going direct to consumers. The very fact that consumers can use technology to be aware, doctors can use technology to give care to somebody sitting at home. That person doesn't need to come to the hospital. Hospitals are mainly used for acute care or secondary care or surgeries or tertiary care. So that's how you sort of disintermediate the entire chain. So in summary, to answer your question, technology is the solution for us to leapfrog what we are trying to achieve in that sector.
And if I can just ask a follow-up there, without the infrastructure in place, without the doctors, the beds, the laboratories and x-ray equipment and so on and so forth, does technology matter though? I mean, is it a secondary enabler ultimately of healthcare, or is it something which fundamentally is the actual impetus behind providing better healthcare outcomes?
The answer is both. It's an enabler, and it will be front and center, which is both your simple tech and your deep tech is what is the solution. Going beyond that, it doesn't do away with physical infrastructure. The kind of geographies that we come from or we are operating in, for the longest time will still remain both digital and physical, and what we call as the phygital model, or the omni-channel model. But technology is going to help sort of untangle the entire care pathway. If you have cough and cold, you don't need to go to the hospital. You don't need to choke up the expensive real estate and take away the time of a specialist, who's more suited to address a surgical case rather than treating somebody with a common flu.
Yeah, absolutely. And for all of you here at Deal Street Asia, I think we heard a new word, phygital, which at least I've not heard before. So that's a very first for you today. Shilpa, moving on to you. I wanted to ask you about what's happening in the commodity mega cycle that's playing out in the backdrop right now of of the investing arena. And there's been a lot of talk perhaps now for a little bit over a year about the anticipated and now coherent supply side inflation, whether it's due to commodities, supply chains, and perhaps even the industrial restarts that happened following the shutdowns due to COVID in Asian manufacturing hubs. So, Shilpa, I wanted to ask you, how does the commodity side and the inflation side actually impact growth investing today? What are you seeing on the ground among your portfolio companies?
So we are predominantly investing in India and in digital-enabled businesses. So the underlying factors that are driving growth in these sectors are just the general shift in business models towards digital, and COVID has kind of accelerated that acceptance. So for our businesses, they are still on the growth trajectory. Obviously, there are inflationary pressures, but we've not seen the slowdown in terms of that consumption patterns being impacted. Again, as they are being driven by the whole shift from the physical to the omni-channel or digital channels. So companies which are inherently leveraging those driving factors are still seeing growth.
Well, that's really positive to hear, particularly with respect to South and Southeast Asia. Is there any leading indicator that you would look for that would imply a slowdown?
So the slowdown, the inflationary pressures and the slowdowns are related to global supply chains getting choked, right? In India especially, there's a lot of domestic economy that is kind of insulated from some of these factors. Yes, there's inflation going up, but as long as the consumption patterns remain on an uptrend, we will continue to see the growth.
Okay, fantastic. I think that allows for optimism to be exuberant in this room. Vadim, I wanted to go on to the next question for you, please, and this regards monetary policy. So during the past 40 years, the world has really seen, outrageously easy monetary policy. And, as a consequence of that, perhaps the redevelopment and reindustrialization of Asia, actually, as a very strong focus within the emerging markets. And consumers have benefited from the consequence of cheap financing, which ultimately has restructured societies from cash economies focused on manufacturing to credit economies focused on services. And if we actually all look around here in Singapore, I think that's a great example of the progress that Singapore has made as well. But today, as monetary policy tightens to battle the source of rampant inflation, how does this impact the technology sector and the technology companies that you look at, particularly from an early stage that you invest in?
Look, it's a very, very great question. It's like right now, because situation is totally changed, even compared 1 year ago, and it affected a lot VCs like us and portfolio companies and entrepreneurs who are trying to raise money. But to be honest, it's affected different places differently. So, for example, Singapore and Southeast Asia, we've got relatively small depth of VC market. So relatively small number of VCs with relatively smaller funds. Of course, we are affected much more than US, for example, where many large funds with a multi-billion-dollar VC funds. So obviously, to raise money in Southeast Asia right now, it's much more difficult rather than to raise money in the US. From investors' point of view, there is a kind of a perceived flight for quality, as was said in the morning. So investors are trying to put their money with safe bets. But technology, as we describe technology, is relatively immune for these cyclical changes. Because, for example, if we invested in a cancer drug, people will suffer from pancreatic cancer anytime. Recession, growth, and they will buy the drug anyways if this drug is approved. So from my point of view, this kind of deep tech investments, they hold more value. And at the same time, the best vintages of VC funds were raised through crises. So maybe a vintage of 2022 will be one of the best. Because right now, as an investor, you've got more power to negotiate. There is no competition of buyers for any startups, and founders become more reasonable with valuations. So from my point of view, technology sector, like deep tech, is not much affected by the current situation. Probably more like a consumer tech.
That's fantastic to hear. So with Shilpa's sense of optimism and your response about cheaper valuations, I think it sounds like there's no better time to invest in South and Southeast Asia here. So that's absolutely fantastic to hear. Sunil, I have a quick question on COVID here. No conference which is resuming after the first time in 3 years would be, I guess, remiss without talking about COVID. But in this post-pandemic world, there are parts of Asia that have not yet exited the pandemic. And whether we look at our northern Asian peers of China, Taiwan, Korea to some extent, Japan, they're still under the scourge of COVID and the lockdowns that are at least slowing down society. Investors saw dire physical and existential medical needs of the population. And as a consequence, are investors really rushing towards investing in healthcare as a dire need, as something which could provide both returns, both on an impact and social level, but also on a financial level? And finally, did not COVID show us that facilities, manpower, and capabilities are more important than actually technology with respect to healthcare? Sunil.
Yeah, so post-COVID or during COVID, I think the sector generally saw a lot of interest from variety of investors. While we only do healthcare, but there was a lot of influx from the generalist, and it came about on the back of the growth that most investors anticipated, and this is across the entire healthcare, from services to products, and that interest continues primarily because COVID, while obviously gave that strong financial impetus, while it was at its peak in the region that we are operating in, and I'm not talking about North Asia or Japan, which is still sort of reeling under the COVID pressure. But what it has done and why it has made the sector more appealing and interesting is there was a very strong positive shift in the consumer and the stakeholder behavior. When I say stakeholder, I'm mainly talking about clinicians and providers, because as some of us would know, healthcare is still predominantly a prescription-led model. 75-80% of healthcare consumption is through prescriptions, and therefore the change in behavior of a clinician or a provider accelerates the entire pace of consumption in the sector. So COVID brought about a significant consumer behavior change, stakeholder behavior change. There was a lot of commercial compulsion, and this is across providers, services to manufacturers, commercial compulsion to adopt technology, both from an excellence point of view, commercial excellence and operational efficiency, and to manage the entire supply chain disruption that happened. And last was the entire regulatory tailwind that came in about to push this kind of a change. So that created a very strong momentum in the entire sector, which led to a significant interest coming from the investor. The second part was obviously, as I meant, momentarily, in those 1.5-2 years, pharma just went through the roof. healthcare operators, hospitals and diagnostics. You can see the numbers. They sort of came with record-breaking numbers. But then, most of the manufacturing side also saw a future opportunity that came about through the supply chain disruption. And obviously the continued geopolitical situation that we are seeing of how do you sort of localize the entire supply chain. For Western, companies, it was more about how do you distribute this between different markets, what we call as an outsourcing opportunity. Yeah. And then there was this whole consumer healthcare, which has completely gone into a different tangent because of awareness and compulsion. Most of us started to go on self-medication. For the first time, even for people like us who operate in the healthcare sector, we didn't know how to operate a pulse oximeter, and we sort of got used to it. Now that change continues, and therefore that opportunity of consumer healthcare, digitization, outsourcing, localization, is an immense opportunity for the sector as a whole.
Absolutely. And for anybody who wants to know how to operate a pulse oximeter, Sunil will give a demonstration afterwards. I just wanted to also remind everyone we are taking questions today. Sunil, if I can just follow up, as a PE investor yourself at Quadria, would you ever consider co-investing with a venture capital firm in perhaps an earlier stage company? Presuming you might require, more control, let's say, as, oftentimes a control investor, versus those investee companies and what their operations are and their firms are willing to give you?
So, as our fund philosophy, given that we are more of a growth stage investor, we like to be the only ones in the cap table from an institutional investor point of view. But the way the market is changing, all of us seem to be accommodative and, going on cap tables with 2 or 3 other investors. The definition of VC investing is very blurred, and the stage at which PEs are coming in is also getting very, very blurred. And we were just talking about it that, PEs are now stepping on the toes of VCs. So I guess we would be open as long as, any of these investments can take in a minimum of $60-70 million of check size.
Okay, fantastic. I'm cognizant of the time that we have left. I wanted to ask perhaps if there's any stories that could be shared and possibly in somewhere between 60 to 90 seconds. Vadim, I understand that you have quite a controversial story to share with us today.
It's not a controversial story, it's a kind of evolution of Vickers, how we progress from being a generalist VC to become a deep tech VC. I'll give you like an example of companies that we invested in the past and we will not be investing in the future. It was a company like a booking platform for fitness studio. Fantastic company, very hardworking, very smart founders, growing like crazy. But like a huge competitors came with deep pockets. It's like, a Grab Uber situation. Who got a deeper pocket and ready to burn money, this company will win. So this is how we lost it. So, but if you've got a cancer drug, you've got FDA approval, you've got patents, etc., you've got better protection. So, and to understand whether cancer drug works or not, we've got specialists, we've got PhD in molecular biology, but no PhD can predict whether like a big competitor with deep pockets will come. So this is kind of my piece of controversy.
Well, fantastic. And following on that theme of controversy, Sunil, you reminded me backstage that some controversies are best left to remain dead, actually. But could you please share a story with us about something you've learned from one portfolio investment of yours that transcended that company and you were able to share across the different companies that you have in your stack? And please 60 to 90 seconds.
So I would not call it as controversy, but it's more of learning. And given that we are minority investors and we invest in growth situations, our minimum ticket size is $70-80 million. So we come into companies which are fairly sort of mature, and the only lesson that we keep taking from these companies and try to replicate is that you have to win over the promoters all the time. And in that process and journey, you keep coming across micro controversies. So we try and take it. Because at the end of the day, as a backseat driver, if you have to sort of get your objective of value creation right and concluded, the promoters, owners of the company are very central to that entire thesis. So how do you get that right? And that's a constant learning that I'm sure most of us would be going through.
Yes, absolutely. And Shilpa, you mentioned that there are some strategies or lessons that you've learned from your portfolio companies as well that you've been able to share across the entire spectrum. Could you share, I guess, one or two of those examples, please?
And just to add to what he was saying, as a growth equity investor, for us, we are really underwriting execution, right? So getting that right in terms of, because we are not at a stage where there's ideation. I mean, obviously strategy and continuously evolving strategy is important, but where we are investing, a lot depends on your ability to execute. And so it's been a learning for us in terms of identifying entrepreneurs who are not just good at ideation, but actually they're very good at execution and consistent execution.
Okay, fantastic.
You should be immune from controversy. Tell us your story.
Well, my own story is something I did want to talk about. Is actually echoes what Sunil said as well, which is knowing when to provide advice and be receptive to what the company's management wants to do and which direction they want to take the company in, the portfolio company in, versus also being able to stand back and let the company and the management team ultimately execute. And I think what happens is a lot of the controversies actually, particularly between GP and portfolio company relations, if you will, they do start off actually as being perhaps a mismatch of expectations, or the inability to realize that the value added ultimately of the GP might be very different from the value add and the capability of the management team. Ultimately, our industry invests in people, and we're investing in management teams and people who ultimately can effectuate the change that they believe in. And so we need to also provide them with that opportunity to execute on that vision on a macro basis, because we all know that nothing is going to go up in a straight line, but that there's going to be ups and downs and turbulence along the way. And that's the one thing that I can share in terms of the companies I've worked with. And thanks, Vadim, for putting me on the spot. So now we're going to actually move to the rapid fire session. And this is an area where I ask the panelists, the co-panelists here, to give a one-word answer, 1 to 2 word answer on what they think. So are you guys ready?
I was born ready.
Okay, in that case, Vadim, we'll let you go first, though. So what stage are we at in the financial cycle today?
Beginning of the end.
Shilpa?
End of the end.
Does that mean it's all game over? Are you going against your optimism?
No, end of the beginning, I would say.
You started off with today.
I think we are entering a good, I'm pretty optimistic for 2023.
Okay, fantastic. And Sunil, which stage of the financial cycle are we in?
Somewhere in the middle.
Somewhere in between. Not too hot, not too cold, but just right. Okay, Sunil, let's start with you then. So you can't piggyback on somebody else's answer, but what's the best geography to invest in today?
It's South and Southeast Asia.
That's a little bit of a punt there, since that's what we're discussing broadly. Shilpa?
India and Southeast Asia.
Okay, well, we'll take that as an India. Vadim?
Where the discovery happened.
Okay, the next question, and please just a one-word answer here. What is the best industry or sector to invest in? Vadim, I guess we'll ask you first.
The best industry and sector. Some sectors, it have to be rapid for answer. The sector where breakthrough change things in magnitude, not improving 5 to 10%, but like improving like 300.
So Peter Thiel's 0 to 1 is what you're talking about, step change. Shilpa?
I would say tech.
Tech, okay, great. And Sunil?
Healthcare.
Okay, so everybody's talking their book, right? Fantastic. What is the best growth story, not including India, but within actually, because we are positioned here in Southeast Asia, but what is the best growth story in Southeast Asia today? Sunil?
Vietnam, Indonesia.
Okay. We'll take your first answer, Vietnam. Shilpa?
Indonesia.
Indonesia, okay. And Vadim?
Tough to say, but probably Indonesia because it's the most popular country, lots of people there, so it's much bigger than Vietnam, so potential is probably in Indonesia.
Fantastic. Thank you for that one-word answer. What is the best tech story that you see in Southeast Asia? Shilpa, I'll ask you first. Let ladies go first this time.
Tech story in Southeast Asia. Gojek.
Okay. Vadim?
I think Gojek, I wouldn't consider it as a tech to start with. I think the best story, but it's, again, part of controversy.
What was that portfolio company that you had again?
No, it's not a tech. So probably Terra Luna.
Okay.
It was a collapse, but it was an incredible invention.
And Sunil, what's the best tech story in Southeast Asia?
Gojek, I would go there.
Gojek. Okay, we got 2 for Gojek and 1 for your company, Vadim.
That goes to your definition of tech.
Yeah. Fantastic. Thank you, Shilpa. So, not including your own firms, but what is the most admired GP in Asia today, Sunil?
There's this healthcare VC fund called alike.What.
Okay. Fantastic. Shilpa.
Firm.
Like I said, not able to talk your book, though. Shilpa.
I mean, that's a difficult one to answer because there's different ones across different sectors of investing and different stages of investing. So I don't think there's a one-word answer for that.
Thank you for the response. And Vadim, what is the most admired GP in Asia?
There is not, you can't define one because one is better in one sector, one is another geography. If you point one name, you basically upset another. So
the co-panelists have promised that off stage they will tell you their actual answers. And then finally in the rapid fire questions, how do rising rates impact technology? Sunil?
Sorry, I didn't get the question.
How do rising or increasing interest rates impact technology?
So if it's deep tech, I would say the impact is lower, or possibly in some deep tech it could be positive as well. If you're solving for an alternate to oil, it is positive.
Okay.
So that's the way I would. But overall answer, as you mentioned, it has limited impact.
Shilpa, how do increasing interest rates impact technology?
I don't think it impacts technology. Obviously, it could impact consumption patterns and it could impact some consumer tech businesses, but it doesn't necessarily impact technology as widely.
Okay. Fantastic. And Vadim, I believe you answered this rapid fire.
Because technology could not be impacted by interest rate. Consumers could be impacted, but technology, how do you impact technology?
Mm-hmm. Okay, fantastic. With that said, then I see here on the jumbotron that's in front of us, we have a question coming in for Sunil at Quadria, and this is his thoughts on investing, actually at the nexus of South and Southeast Asia in a country called Bangladesh, which arguably has stronger growth than even the darling of Vietnam today. So, Sunil, how do you look at investing in Bangladesh?
No, it's quite an interesting market, and again, it has sort of similar dynamics to any other large economy like India, Indonesia, and Vietnam. It just depends on what stage of investment are you getting it. VC, it seems to be exciting. For growth capital providers, as in we are highly interested in that market. But for the tickets that we write, there are far and few. I think the only evolved market from our perspective is a bit of pharma, nothing beyond it. But as a market, we like investing in frontier markets like Sri Lanka. Market is small. Bangladesh, exciting, but again, opportunities are far and few. Cambodia, market is small. So that's the way we look at it.
Okay, wow. So that's fantastic. So also Cambodia is another target in addition to Bangladesh. Vadim, this next question probably is quite attractive for you, but with respect to health tech investments, and I guess I'll slightly ask it in a slightly different way, but from a VC perspective, do you foresee it being commercially attractive and profitable in the long term, or is it still early days? Are you still just seeding the ecosystem to see really what happens?
I think it's too early because there is no whole health tech company like a multi-billion-dollar health tech company. There is no examples, at least I don't know. So I think from my point, it's like probably too
fantastic. And if an early stage investor says it's too early to invest in this, I guess Sunil, as a later stage quintessential healthcare investor, is health tech actually attractive from a investment standpoint? Can you see returns being made?
No, absolutely. Why not? But again, how do you define health tech? If it's early stage, then a PE, going by its investment strategy may not be able to invest. But if a health tech company is raising Series C and Series D, which quite a few of them are, it's certainly interesting and appealing to any private equity investor.
Okay. And Shilpa, do you find health tech attractive as a growth investor, or are there other areas of the investing spectrum sector-wise, whether they're tech-enabled or even non-tech-enabled, that are more attractive to you today?
So again, it depends on what's your definition of health tech, but there are definitely areas, there are quite a few commercially attractive health tech investments from a growth perspective. For example, and there are different applications to it. For example, we are invested in a business that uses genetic testing data for a data to drug discovery process. So from a PE perspective, it's a business that's profitable from their testing centers, but there is an opportunity here to create disproportionate return from the data to drug discovery plan.
Okay, fantastic. And I believe the next panel is going to answer the question about our definition about what is health tech, in case you're interested in that, as it was a question that all of us had here. But wanted to thank everyone very much for joining us on this panel today. If you do have any questions, please feel free to directly liaise with Sunil, Shilpa, Vadim, or myself. And again, thank you all very much for joining us today.